Hey, my family, Vinny. Hey, how are you doing? Vinny, my cousin, Vinny. How are you doing?
Good, good. It's nice to meet everybody today.
Yeah, same here, man. Same here. So this product dropped, and we are excited about the product. I always say, um, the city of Boston always have the best product.
Mhm.
Not the best advertising, but the best product,
Yeah.
right? And this next three family co-purchasing product, I think, is the next one to go.
Yes.
I thought Section 8 was amazing, the Section 8 to home ownership.
Mhm.
But this product, you doubling up with the down. Well, I'm gonna let you explain the product.
No, not a problem. But I agree. I think the city does a lot of good things between Section 8, their down payment assistance program, deed restricted properties, you name it. I mean, they pretty much, set the tone for mass and pretty much the country, too. A lot of people look at what they do and try to mimic what the city puts together. So today we'll talk about the co-purchasing program. The funny part about the program, and I have a presentation that I'll share in a second, but the funny part about it, on my side of the world, there's really nothing special about it. It's what we've been doing for years, right? We've always had multiple people on applications, maybe buying a two family, living in one unit, renting out the other unit. The twist here is that they're now going to just separate them as households, and which allows them to apply for down payment assistance money,
Both
right?
sides.
On both sides, right? So now you don't have to worry about the combined number anymore. So if one household earns X, they could qualify for a certain amount. The other household earns whatever that amount is, they could qualify for that piece. And it just helps them buy a home because, as we know in the city of Boston, to buy a multifamily, you're probably talking minimum 900 to a million plus, depending on the area. And how many people have 5% to put down on that type of sales price? Not a lot, right? So I think it's a great program. So let me share my screen and let me know if you can see it in a second here. Can everybody see the screen?
Not yet.
What's the
All
matter,
right.
There
kiddos?
you go, right?
Come on, let's
Wait,
go get dressed. What are you doing?
hold on.
Let's go get
Jeff,
dressed.
Jeff, you off mute. All right. All right, cool.
All right, we're good. All right, so here's the screen. It's a really short presentation. I kind of took what the city put together, try to do a condensed version to give you kind of all the points, the bullet points, so that way you can share with your client base. I'll be more than happy to forward this over to you guys, so that way you have a copy of the presentation as well.
Thank you.
Basically, the second slide here talks about what the city identified as the problem, right? The city basically came up and did some research and basically it's cut and dried. Boston current supply of for sale housing affordable to middle income households is not meeting demand, which we all know that, right? So that's been the challenge. So based on their statistics in 2024, the median sales price was about 780,000.
And this is all around with just three families, but just all real estate.
This is pretty much for two and threes.
Okay.
So it's probably a combination of the two, but they probably took the average of what they were seeing back in 2024. After maximizing all city down payment assistance, closing costs, interest rate reduction resources, a two-person household in the city of Boston earning 100% area median income has a maximum purchase power of about 500,000. So you can see, 100% AMI. So what does that work out to be in Boston? That's a little over $100,000. Years ago, you made $100,000. Still $100,000 is a good living, but unfortunately, in today's times, you can't buy a lot for $100,000 in earnings. So as you can see, if your average loan size is going to be a sales price is 500,000, and you're already 280,000 in the hole, right? So how do you make that up? Down payment. Again, city sees that a lot of people don't have an extra $280,000 floating around to put into the property. So then what they decided to do is come up with the program. So what are they doing? So basically, to support households who don't qualify for affordable mortgage products and together have a combined income that exceeds 135 AMI. So I'm not sure if everybody realizes what AMI is, area medium income. All your first time home buyer programs are based on this number. You have MHP, which we participate in. They use numbers of 80 to 100% AMI. You have mass housing who caps out at 135% AMI. But those programs are based again on how many people are living in the house. So you can have one person applying, but if the spouse is working and the spouse is not on the loan, you have to count that income into the household group. So that could put you over these limits. So the city basically looked at it and said, okay, the down payment in the amount of 5% for each household share of the purchase price, reasonable closing costs associated with the purchase price of a multifamily with the following limitations. So what they basically have done is they're going to give 5% of your sales price. And they're going to ask the borrower to put at least 1.5% of their own money into the transaction. That's each household. So if you have a 2-family home, you have 2 households, each household has to come up with a 1.5%. And then the city would give you 5% on top of that. Okay? Because they want you to have some skin in the game, basically. And then what they did is they looked at the numbers and said, okay, if somebody makes 100% area income, we're going to give them up to $50,000. So the 5% would be the down payment piece. And if the 5% represented, say, about $35,000 for down payment, that leaves $15,000 left over that they can use for closing costs. They can use it to buy down their rate. If they're going to have mortgage insurance, they can use it to do single paid MI, right? So they can buy out the mortgage insurance. So you can use that extra money for a variety of things with the city, okay? Then they said, all right, what happens if
Hold
somebody...
on, hold on,
Sure,
rewind,
sure.
rewind. Because I don't think they heard you in the back. So a couple of things you could do with the extra money. You could buy down your rate
Yes.
and or, right? It's not both, it's just or.
It depends on what the numbers look like.
Okay, so you could probably have the opportunity to buy down your rate and get rid of PMI.
If the numbers allowed you to do so, yes. If there was enough money left
Wow.
over, you could do that.
So you could have a better rate than the market and no PMI. Okay.
If number wise, yes, you could do that.
Okay. Keep
Okay.
going.
And then what they did was they said, okay, what happens if you make over 100, right? Over the 100% number. They're still going to help you, but they're going to cap you at 35,000, right? So again, in theory, you can have the first floor unit make 100% or less. They're going to get 50.
Mm-hmm.
Second floor unit exceeds the 100, but it's under the 135 number. They can get 35. So
So
altogether,
that's
you get $85,000.
$85,000 that the city's given um, partners, might as well say, right? Business partners to
Yes,
purchase 3 families.
correct. Twos and threes.
2s and 3s. Let's go.
Twos
That's
and
what I'm
threes.
talking about.
Okay.
Now,
The city is going to require them to go into a co-purchasing agreement.
yep.
Okay. So there is an attorney that we use. We actually are doing one right now. We have one in process. So there's an attorney in Boston that we hooked up with that is familiar with this process. They will create the contract for the customers. Okay. They'll sit with the customers. They'll explain the contract to them. The customer has to sign it. We have to send a copy of that over to the city of Boston. So that way they can make sure that it's in order, everything is fine, and it's part of their approval process.
Got it. And that attorney is different from the closing attorney, correct?
I'm working to put that attorney on my list. So my thought is one-stop shopping, right? We
Okay.
have them create the co-purchasing program, plus I'll give them the transaction to close. So that way everything stays with them, makes life less confusing for people, and it speeds up the process.
Got it. Okay. Got it. And then let's break this down and obviously we're a real estate brokerage.
Mhm.
We're talking about how's the 2-family model work, right? If we're partners. How, I'm trying to understand. So we buy a 2-family and say this 2-family rent, mortgage, I don't know, just throwing it out there, $6,000, right? Like at that point, how does the numbers work where you might be better off renting at that point, if that makes sense?
It does. I guess so. Like I said, in our world, we've always just combined everything like we're still going to do here. So
Yeah,
I think it's the co-purchasing agreement that kind of gives you that outline, right? So that way each person can sit there and say, does this make sense for me to participate
yeah,
in this, right? If my mortgage payment is going to be $3,000 a month, $6,000 a month, I'm going to be on
yeah.
the hook for three. The other household's going to be on the hook for three.
And that's not including water or maintenance.
That's not including water and maintenance. And maybe that 3,000 is more than what that person has budgeted or set aside. And they may look at it and say, I like the idea, but man, I can only afford 2,500 a month,
Uh-huh.
right? So do I
And
want to get into this? And then
yeah,
you have
and
you have a wild card too, right?
yeah.
The co-purchasing piece. What happens if the other person doesn't pay?
Mm,
Right? So that's the thing. So if you go into this with a partnership, I mean, obviously you got to be careful who you partner up with, right? You're going to make sure that they're reliable and they're going to continue to make their mortgage payments. And in the agreement that the attorney creates, there'll be language in there that will talk about what happens if one party doesn't pay.
got it. And obviously, so let me ask you this question: Is this contract? Who makes did the city make the contract? Did the attorney make the contract? Who creates this contract?
The attorney the attorney makes the contract. The city had some guidance as what they wanted to have in it. So the
Hmm.
attorney went, created the contract, the city reviewed it and signed off on it.
Okay, so everyone has this one contract.
Everybody would have the one contract. It may be
So,
catered a little to each individual need, but
all right, that's what I was going to ask you.
the
Okay, because
contract itself, the scope, it's pretty much set up.
okay, because if I'm going in partner with going into a partnership with someone, I'm thinking if you miss a payment, well, one is a penalty, and then two, interest will be incurred,
Correct.
and I can add that.
Yeah, you can add that. And plus, remember too, in my world, right, this is where it gets tricky because in the mortgage world, so you have a contract set up outlining what happens if somebody misses a payment. In the mortgage world, we're not looking at 50-50, numbers here, right? We're looking at two people on a loan with one payment. So if that other
Yeah,
person doesn't make the payment,
yeah,
you're going to have a delinquency on your mortgage, on your credit report,
correct,
right? So that
correct.
other household would have to come up with the money to make up the difference to pay that payment for the month.
So with that being said, I'm loving this conversation, and I hope everyone's paying attention. Um, with that being said, it would probably be smart to create an escrow in the partnership as well, then,
I would agree. The city doesn't require
right?
that, but I would agree it probably makes sense to put some money set aside between the two parties as a rainy fund, right? It's a rainy day
Yeah,
fund. So if something was to happen, they can tap into that account.
yeah. I think we would. I think it's smart to have at least three payments in this escrow, and the penalties and the interest. Like I think we should scare the next person and the and if it maybe we put a timeline on that particular delinquency, we say, hey, you could lose ownership or your percentage will go down.
Mhm.
I think because one thing you want is you just want the other person to pay. You don't want to take ownership away from them. You just want to
Correct.
scare them so much that they actually pay,
Correct.
right? We have two questions. Taylor
Sure.
Andre,
Good rising, happy Friday. So, in the same vein as what Alex is saying, thinking about as far as escrow is concerned, the money that the city gives, could that go in escrow? Because I'm thinking, are people just able to come up with 3 months worth and put that in escrow if purchasing is already a problem that they're co-purchasing? So, can the city funds go into that escrow? Or is
Good
there a
question.
way?
Good question. Unfortunately, no. The city funds go strictly towards down payment and closing costs. So there's really no way to take money out of either the $50,000 or $35,000 grants that these people were getting. There's no way to take any money out of that to set it aside.
how about reserves? They should have
Reserves are
reserves, right?
reserves are just normal, and not it's just normal reserves. We would just look at bank statements to make sure it's a multifamily, so they should have a handful of months worth of reserves. Typically, in the mortgage world, we use 401k for reserves, right? So I think
Uh,
you could certainly use 401k in this conversation. Just make sure that you have the terms of withdrawal. That's what we ask for, right? To make sure that if it's a hardship or something happens, they can access the funds.
got it, got it.
So maybe the wording in the contract with the attorney references that if somebody falls behind, maybe there's some language in there regarding reserves, maybe getting into tapping into 401k, whatever language or verbiage they want to put into the agreement.
Got it. Got it. Okay.
Okay.
Okay. And Joe. Jordan, you still had a question?
Yeah, it was pertaining to the reserves. I was gonna say to qualify, wouldn't the buyers need to show proof of reserves anyway? And if they do need to show proof of reserves, maybe after they close, the money that they were showing for proof of reserves can go into that escrow that Alice was talking about, just to, just to be able to offset if there is any setbacks or anything like that. But now that you're mentioning the 401k, I can assume if people need the down payment assistance from the city, I'm assuming that they don't have 3 months of reserve just readily available, or accessible to them. So, I think you answered my question when you mentioned that folks are using their 401k,
Mhm.
but on the off chance that they're able to have it offhand, then I would suggest that they put that in the escrow.
Yeah. And just so you know, I mean, the reserve piece in the mortgage world would vary depending on Fannie Mae and Freddie Mac. All right. When you buy multifamilies and using a Fannie Mae product, Fannie Mae typically looks for 6 months worth of reserves. Okay, so it's a pretty hefty number. In the Freddie world, Freddie Mac may, in some cases, they don't even ask for reserves. So, again, depending upon the customer's cash flow, asset situation, if they don't have enough in their 401k, typically as a lender, we would move them into the Freddie Mac world because, again, if there's no reserve requirement, it improves the cash to close position and helps them buy the house. All right. Any other questions before I get into kind of what we've already talked about a little bit, but just in a little more detail?
Yes, I got a good quick question.
Sure.
Does this loan only apply to first-time home buyers? Does everybody has to be a first-time home buyer, or does anybody, if they own properties before, does that apply to them as well?
It
Or
is
will they be able to apply
strictly for first-time home buyers.
all around? Okay, thank you.
Okay. All right.
Yep. And one more question, Taina.
Thank you. My understanding is that, let's say one household is in a particular AMI, they are able to get X amount towards the purchase of the house. And the second household, let's say they make less and are able to contribute differently, or less to the transaction. Does that change the ownership? I don't know if the approved contract states that anywhere, but does that change the ownership balance? So if unit A households is able to contribute more, are they more owners? Do they have more owner stake in the home?
It's a good question. And I got to be honest, I don't know the answer because I haven't seen the co-purchasing agreement. So I would tend to think in that example, I get your point, right? So if unit one is putting 6% into the transaction and unit, two is only putting their 1.5% in the transaction, should they have equal share of the property, right? Because obviously one has put a little more in than the other. So I think that is something that would certainly be covered through the co-purchasing agreement. I can try to get a copy, just a generic copy, and I can try to share that with the group. So that way, you guys can take a look at it and see, and we can take a look and see how that is covered within the agreement.
Thank you.
But it's a very good question. Any other questions? If not, we can go to the third slide. And really, it's just kind of a recap, right? It says to be considered. We talked about a first-time home buyer. They got to go through a first-time home buyer class, contribute at least 1.5% of their share into the transaction. Primary homes have less than 100,000 in liquid assets, right? That's always been a requirement with the city. They actually increased it. It used to be 75,000. Then it talks about getting into the co-purchasing agreement, which we talked about. Now it talks about eligible properties, 2 and 3 family homes located within the city, have as many vacant, unoccupied units as participating household listed on as joint owners on the mortgage. So basically, one of the requirements with the city is that if it's two households buying a 2-family, the city does not. That house has to be delivered vacant, but the city does not want the existing landlord to displace the tenants.
Oh, what does that mean?
They don't want landlords kicking people out so they can sell the house. So that's
So
going to
how
be a
can
little,
they sell the house to this person?
that's going to be a little tricky. It is. That's going to be a tricky
Okay.
one.
I,
So yeah.
I'm I don't know why the city didn't make it 3 and 4 families or even 2, 3, and 4. Because the 4 family, I feel like it probably will work great with this product.
It would. It certainly would, but I think and I don't know the answer why they excluded four families. We kind of talked about it. I was involved in the pilot when this thing was created. We kind of talked originally about 2 to 4 units,
Yeah.
but they decided just to go with 2 and 3s.
Okay. Okay.
Yeah,
Um.
they felt that was more of the need than the 4 unit for some reason.
Okay.
Okay, and let's see. And as far as programs, the programs, when we talked about this, originally the discussion was, can somebody use mass housing for this product? And the answer would be no, because the way mass housing treats household income. So really, the products that we're talking about here would be traditional Fannie Mae, Freddie Mac programs, and they will allow FHA loans. Okay. So, the city, if you do an FHA loan with the city, for this program or any of the programs that the city offers for down payment assistance, they basically come back to the lender and they want us to explain why we're going with FHA. And these days, the reason why most lenders go with FHA, FHA is not what it used to be, right? Everybody always heard FHA. Everybody always thought, oh, that's because somebody had bad credit, right? Does it still allow for low FICOs? It does. We go as low as 580. Okay, so that still exists in that FHA world, but the rate is so much better than Fannie Mae right now. All right, your traditional 30-year mortgage is probably hanging around on any given day 6.875 to 7.125. In the FHA world, your 30-year fix is anywhere from 6.25 to 6 3/8. So that's a big difference. And also, FHA changed their monthly MI premiums, so they're almost in line with traditional MI companies. So your PMI is pretty much equal to what you would get in a conforming loan, but your rate is so much better. Not to mention, FHA allows for higher qualifying ratios. You go up to 57. So there are real good reasons to put somebody in an FHA loan. It's just up to me or any lender just to explain to the city why. But those are the 3 programs that you're looking at. And like I said, it's there's not a lot to it. It's pretty cut and dry. And again, it's something that we've always been doing for years. It's just now has a down payment component to it.
Vinny, I have
Got
a
it.
question
Sure.
pertaining to the occupancy.
Mhm.
So you mentioned that landlords cannot kick tenants out in order for buyers to purchase. So say if it's like a 3 family and 3 subsets of people are purchasing it, and they're all presumed to have to own or occupy these units, correct?
Correct.
In order to qualify for this program. So that means
Correct.
if 2 of the 3 units are occupied and one is tenant at will, for example, can the landlord say, well, listen, there's no lease here. The tenant will, is tenant at will. Can the future owners just serve them within the 90-day period or after they take ownership so that they could, the bank could assume that they're going to end up occupying it at some point once the tenant leaves? Or do all units have to be delivered vacant at closing?
It's my understanding all units have to be lived. Well, on the 3 family, if you have 2 households buying the 3 family, you only need 2 units to be delivered vacant.
Okay, so 2 households can purchase a 3 family, and still have that other unit as rental income, as long
They
as
could. They could.
as long as all the parties on the mortgage are occupying the space.
Correct.
Got it. And what is there um similar to just regular loans? Is how would they know they're occupying the space? What type of information needs to be provided to show that they'll be occupying the home, for
You
example?
know, it's a good question. And, even though a lot, I've been doing this over 30 years and a lot's changed over time, but I guess it's always still the same. It's the honor system, right? So when people say they're going to buy a home and occupy a home, we take people at their word. We take people at their word because they sign the application and say that's their intent to occupy. Um, do they do spot checks on properties? Sometimes they do, sometimes they don't. It's hard to say. Um, but I guess if they're saying that they're going to be living in the home, and we give them up to 60 days to occupy. There's really no reason for us to go down, and do spot checks down the road.
And when you say you give them 60 days to occupy, does that include in this particular program? You giving them 60 days?
They
Or
follow
because
Fannie
it's,
Mae. They follow Fannie Mae guidelines. Fannie Mae gives you 60 days to occupy the house.
but I just want to make sure we are on the same page, because
That
I
they
just
give
heard
it
you,
to you as well. I'm
yeah, I just
pretty
heard
sure
you
they
say
do.
that one of them have to be vacant. Two of
They
them, if
do,
it's
but
two family, 2 units have to be vacant, correct?
correct. But remember,
Before purchasing.
before purchasing, but occupying, I mean, they could be doing. They may want to do work to it,
Oh, okay, I got to
right?
see
So
what you're
they may
saying.
not be moving in right away. Maybe,
Got it.
maybe their lease is, for another month, and you know what I mean. So there are examples where they may not be
Gotcha.
taken or moving right into the property on day one.
Got you. Okay, got it. And Joanna, do you have another question?
Yeah, through this co-purchasing program, say two families purchase a three family and they decide, you know what, I want to buy a single family. Can they be refinanced off where it's still just one person? Now it's one person that owns the three family, as
They
long as
could
they,
be.
okay, so you could always do the co-purchasing program, buy a three family, and then maybe like a year or two, like, you know what, I want to, free myself to go buy another property. They could just be refinanced off, and it could
They
be
they
just one
could.
owner. Oh, okay,
Ooh,
They could, and
that's
again, it goes, and I think it's a good question, and I think what that
that's a
goes, that
great
refers
question.
back to the co-purchasing agreement,
hmm
right? So I'm sure within that document, there's some type of language as far as what happens if somebody wants to do that down the road. Do they have to
That's a
give the other unit
great
owner
question.
notice? I mean, that again, I'll get you a copy of the agreement so we can take a look at it to see. But I would tend to think that there's got to be some type of notice that they have to give to the other unit owner, so that way they could be prepared.
That's a real good question. So how about if they both, they've been in this partnership for 10 years. Now they both want their family is grown out of
Mhm.
the space. What do you do with the house at that point? They both want to leave, but maybe they don't want to sell, or do they have to sell? But what do you do with that house at that point? And it's not an FHA loan.
Yeah.
You just use the program. It's not an FHA loan, but they grew out of the space.
Again, I'd have to, I'd have to talk to the city about that and get their take, right? Because it's a grant, and after so many years, the grant is forgiven. So I would think
Yeah.
that they would have to stay there within, I believe, 5 years minimum,
Okay.
right? After that, the grant's forgiven. So I think whatever they want to do, they would typically do. But I can certainly pose that question to the city and get back to you with the answer.
Got you. So the 5 years for the grant to be forgiven, but you could sell that home if you wanted to within the 5 years.
You
But
could,
obviously
and
you'll be
they'd have
paying
to
back the
off
grant.
correct, and I don't know if they'll prorate the grant too, right? They may
Yeah.
look at the number and say, okay, you used it for 2.5 years, we'll prorate
hmm
it. This is what you have to give back to us, type situation,
hmm
right? Because a lot of my customers, I don't get asked that question a lot, right? Because they figure they're going to stay there for the 5 years,
Yeah,
so
yeah.
they
Uh,
get the free
uh,
money and they don't have to pay it back. But something could
got it.
happen. I mean, the family
Correct.
could increase in size. Maybe they change jobs and have to relocate to somewhere. I mean, there's all kinds of stuff that can come up.
And they cannot share one unit, right? So if it says siblings, might not have any kids at all, and they want to co-purchase, they can't share the same unit. It has to be 2 different units.
If they shared the same unit, that's one household.
Got you. Got you. Okay.
So
Okay.
could they? They could, but we just need to make sure that that one household's income falls within the income charts to be able to give them down payment assistance money.
Got it. Okay. Taina,
I feel like I have a million questions, so I'll see what I can get out. Um, Great information. The So just to follow back up, as far as it comes to the owners living in the home,
Mhm.
um, the vacant unit, sorry, I have so much noise in my house. With the
we
vacant
can't.
units, sorry, with the vacant
We don't
unit,
hear anything.
you don't hear my background?
I don't hear any noise.
Oh, okay. With the vacant units, uh, were you saying that they have that 60 days? So let's say, for example, a lease was ending 60 days after closing. Would you still be able, would these buyers still be able to acquire this home knowing that the lease is up? Let's say in 30 days of the 60, would you still be able to acquire that home if you needed to wait 30 days in order to occupy the space?
In the mortgage world, you could. I would have to defer that to the city, and I could take that as a takeaway as well, and check with the city to get back to you.
Okay. And as far as spot checks,
Mhm.
what is a spot check? And if you are found to be not in compliance with your agreement, your mortgage agreement, what can then happen to the owner?
Okay. So spot checks could just be, it could be somebody within the bank just going servicing, just going out to make sure that the person's living in the house. They'll go to the property. They'll go up, they'll take a look at the mailboxes, make sure the person's name's on it. They may send, maybe something as simple as sending correspondence through the mail, and they get a return saying, return address, or it ends up going to a different address. Um, you know, doesn't happen that often, but in the past few years, residency fraud in the mortgage industry has been big. And it's what we've been seeing lately. It's more of the PMI companies that have been doing the spot checks. We had a transaction about a year ago where the gentleman bought a home, multifamily. It was around Worcester County, and he said he was going to live in the property. The PMI company went out, took a look, determined that the individual was not living in the home. So they send us a notice informing us that the customer is not living in the property. So then we have to go through our due diligence to figure out what's going on. And if it's determined that the customer is not living in the property, we then have to send a demand notice, basically telling them that they broke the covenants of their mortgage, and either that they provide proof of residency in the home. If they don't do so within a certain period of time, they would have to either refinance the mortgage or sell the property, because the bank would basically give them a short period of notice for demand for payment in full. Now, this particular transaction, the poor gentleman bought it and then was having all kinds of issues with the house. Mechanical systems failed, leaks, all kinds of things going on. And he couldn't live in the house because it was so much damage, he had to have work done. So, he basically came back, explained what happened, gave us all the papers, all the filings, and then we were fine with it because it made all the sense in the world. So there are reasons why somebody may not be able to get in the house within the required time, like that example. And then sometimes you have people who think once they sign, that's it. No one's ever going to find out. But I will tell you, it is a big topic in the industry. Fannie Mae, Freddie Mac, HUD, they're all coming down hard on lenders. They all want lenders to make sure, and they're doing more spot checks than they ever did. Any other questions?
And we're gonna move forward.
Okay. All right. Well, that's pretty much my presentation. As besides this program, what we do at Salem 5, we do mass housing. Like I said, we do the DPA loans. We participate in the federal home loan program. I'm not sure if you guys have ever heard of Equity Builder or HOW or Lift Up.
No.
All right. So those are federal grants that come out about 2.5 months in the year, typically come out in May. First come, first serve. They're based on income limits. First-time home buyer. They have different requirements. One has that the customer has to put at least $500 into the transaction. The other requires 1.5%. It's
Can you
grant.
stack?
You can stack. I can
Okay.
piggyback. I can piggyback one of the federal grants with the DPA money from the city with Mass Housing's DPA. I mean, I've done some loans in the city and I've stacked them, and I even use Stash. Urban Edge, Codman Square grants. I mean, I had one that I think they got almost $100,000 in funds. And
Wow.
so programs are out there. The federal programs are hard because again, they're first come, first serve, right? They only release so much money. And the reason I can participate is I'm a bank and I'm tied to the Federal Home Loan Bank of Boston, who's basically is the one that funds it. So there is money. The next draw, or the next release comes out on June 1st. Then there's one on June 15th. There's one on July and mid-July. So I believe there's 4 more releases left. And it's like dialing for dollars, right? It's like trying to buy, concert tickets online. You keep hitting refresh. That's what we do, right? We have the loan all set. We're in their system. We keep hitting refresh until we're able to capture money. It's kind of crazy. But those
Oh, wow.
programs are out there.
Joanna?
Yeah, those the How and Lift Up programs, I feel like those once they're released, they're usually gone within like the first hour. It feels like they're so competitive. And from my understanding, those you have to have like a active sale, right? You need to be under contract with a client, at least at PNS stage.
You do. So you have, and you're right. Typically, they do go quickly. We've noticed this year, not as fast. I mean, there's still some money left over for some previous releases. It's because of the combination of things. To your point, you have to be under contract, has to be approved, and then they have their own requirements, right? So they have DTI requirements, which basically says they don't want the front end, the housing payment, to be more than 39%. And these days, where prices where they are and rates where they are, a lot of loans that lenders are writing, you're probably talking that front ratio being in the mid 40s, right? So because of what's going on in the market, I think that's one of the reasons why you kind of see some money being left over compared to years past.
And can you also do you guys do 1+ as well? 1+
I don't
Boston?
do 1+. I do the traditional one.
The traditional one. And that's the one you recently told me that were there some guideline changes with that as well, as far as
There were, and the 1+ is now offered statewide, right? So you have the 1+ Boston, and you have the 1+, which is the statewide. It's basically a carbon copy of what the 1+ Boston is, with the exception that they don't get DPA money from the city of Boston, right? It only applies to Boston itself, but it has DTI restrictions. You have your your ratios can't be more than 38%. Multifamily is a little higher. Their income limits, they only go up to 120% AMI compared to some of the other programs that go up to 135%. So it's kind of if you can qualify for it, it's a great product. No doubt about it. But it's such a tight window, not a lot of people qualify. I think, in the years that I've been doing it, I'm kind of old because I remember when these things first rolled out. I used to say that every 10 people that walk through the door, maybe 3 get it. That's how tight of a box it is.
And with that, that's the one with the 29 gateway cities, correct? The one that's statewide that you're referring to?
The gate well up for the 1+, the 1+ is state. I don't think it's tied to gateways anymore for that one, for the MHP.
So, because there was the 29 cities. So, are you
Correct.
saying it's anywhere in Massachusetts now? It's not limited to those 29 cities anymore?
So the 1+ is not limited. The gateway city term is more of a mass housing term,
Mm-hmm.
and mass housing has made program changes. So effective June 2nd, mass housing is now they're getting rid of their first time home buyer program. And they're going to now replace that with their above 80 AMI program. So the above 80 AMI program had down payment assistance available, but that was only for gateway cities. On June 2nd, they removed the gateway city restriction. So now that program is available statewide.
Oh wow, that's huge. Okay,
And,
and what's
and
the
they
amount of money tied to that? In down
25,000.
So 25,000 in down payment assistance for the 1+ Massachusetts, excluding the gateway cities.
Well, no,
And
again, so the gateway, so that's 25,000 excluding gateway cities for mass housing.
yep.
Okay, the 1+ doesn't have gateway cities. Those income limits are going to vary depending upon the community
Or the household size, would you
or the
say?
household size. Yes.
Got it.
All right.
Okay.
And the other thing about mass housing as well, they increased their income limits as of this Monday. So 135 AMI in the city of Boston last Friday was $191,000. This
For what
Monday
household? For what household size?
for a household. Well, no, it doesn't have house. That one doesn't have household. That one is just who's on the loan.
Got it. Okay.
All right. Now on Monday, they increased it. So that 191 has now become 205. So it's gone up about what, nine, 16,000, $15,000?
Okay. So that's per household. So if it's a household of three, two
No,
adults,
it's not per household.
so what is
Who's
it per
ever
then?
on the loan.
Okay. So if it's just one single person on the loan, they can't exceed that income.
Correct.
Got it. Okay. All right. Thank you for clarifying.
Tina?
Yes. So when it comes to two questions, does this program, does the co-purchasing program cover 203K and or rehab loans? Can you
There's
use,
nothing,
sorry,
there's
can you
nothing
use them?
about it. Well, there's no exclusions for that. So I would tend to say it does. I'll have to take that as a takeaway as well for you. But there's nothing in the guidelines when this was rolled out that said that excluded 203K or rehabs.
Okay.
That's a good question.
It is a good question.
And then at what point in the transaction would a buyer know that the home is not eligible due to vacancy issues? So I'll throw in another, like, what if everything was going good, but then all of a sudden there's an eviction process in play? Or if there already is an eviction process in play, does that make that home eligible or ineligible for this program?
I would say that typically those questions are identified in the listing.
Right. So could, because I guess I'm trying to think of like what homes shouldn't buyers look at? Like if they see a listing and it's just like, let's say for example, the listing is very honest and talks about an eviction, an active eviction, or if in the process of the transaction, we realize that you may have a problematic tenant that is not trying to leave, not trying to vacate. Does that make the buyers now ineligible to purchase the home because of the vacancy issue, or can they still move forward and then hope to resolve that?
So if the one example you gave, if it's an eviction process and it's notated in the listing sheet, then they're going to know, and that'd be the issue. During the process, if it's determined that there's going to be an issue getting a tenant out of the property, the city kind of relies on the bank to relay that information to them. Because part of the approval process with the city is that the customer has to, obviously give certain documentation so they can process it. And then they come to me and they'll ask me for certain paperwork. They're going to ask me for a copy of the appraisal. They're going to ask me for a copy of my loan application, my transmittal sheet on how we underwrote it. And it's going to want a copy of my commitment letter. And if my commitment letter references anything about confirmation of, tenant being vacated or whatever you want to call it, then, estoppels, things like that, then the city's going to pick up on that.
And when they do, the assumption is that they're going to decline?
I think they're going to give an opportunity to try to figure out what they have to do to fix it.
Okay.
The one thing about the city of Boston is that they're not about denying loans, they're about approving them. They do anything they can to make it work for the customer. So I think if something was to pop up during the process, we'll have the conversation with them, and then they'll try to figure out a way to make it work, what the alternatives would be. I do give them credit for that because they really do. They really try. I mean, there's been cases where they've made exceptions and given people more money because numbers have changed at the very end, and they don't want somebody not to be able to get the house.
All right, and I go ahead, Tina. I think I don't know if Tina was getting to at this, but so if when exactly should the unit be vacant? Before closing, before commitment, before PNS? When exactly that this units need to be vacant?
I will get you I'll get you the exact. I'll talk to the city because again, my world is a little different, right? So I have different stages of it.
Yeah.
So, but I'll confirm that with the city when in the process should it be delivered vacant, or when should they be notified that it's been delivered vacant.
Okay. Got it. Thank you. Any other questions? All right, cool. So I got a question. Can you explain how do we qualify or send our clients um to sign up for this particular product?
So they can go onto the Boston Home Center,
Mm-hmm.
and there will be a link to their online application process.
Mm-hmm.
So the city does allow for pre-approvals. They do pre-approvals. So you can
Okay.
have somebody go to them, submit their paperwork, tell them what program they're interested in,
Mm-hmm.
and then the city would go ahead and collect the information, process it, and then they would basically give them a pre-approval letter.
Okay, so the pre-approval letter, so the city's giving the pre-approval letter
They,
or
they do.
or we're gonna
The
go to
city
a
would.
bank,
Well, you have two, right? The city's going to give a pre-approval letter based on the grant,
correct?
right? So they're going to look at it and say, okay, based on what we collected and what we reviewed, we're informing you that you're eligible for a grant of X amount of dollars, so much towards down payment, so much towards closing costs.
Mm-hmm.
Then they would go to the lender, and then the lender would give you traditional pre-approval regarding the mortgage product itself.
Mm-hmm.
So there'd be basically two pre-approvals in
Two
it.
pre-approvals.
Yeah.
Got it. Okay, got it. Any other questions, team?
So yeah, just to be clear, they get the first approval and then we call somebody like you, or they get the first approval and they're linked to somebody through the city of Boston, a lender.
So the city will give, so depending upon the program, the city would direct them, right? So if
Mhm.
the city, if they're doing a co-purchasing program, the city will give my name along with maybe the other four companies that are doing it. If they're doing just your traditional down payment assistance program, the city would give them a list of lenders who they participate with.
Okay, so say for example, as an agent, I sent my client and I said, "Hey, listen, this is a great program. Based
Mhm,
on your situation, it sounds like you should apply for this.
mhm,
Here's the link to the Boston Home Center's application. Fill
mhm,
this out and go through the first pre-approval process." They do it, they get approved, they get a number.
mhm,
Um, and let's say, for example, I really like Vincent Gregory and and I think that he would be the best fit for them. How
mhm.
do I at that point, or do I at that point suggest who they might want to work with as a lender?
You could. So you could send your customer to the site, say, okay, here's the link. You have to apply with the city for their program. But you're also going to need to get your traditional pre-approval, and you could give my name or any lender that you decide to refer to. So that way, and then when that customer talks to the city would say to them, are you working with a lender? And they would answer yes. You could take that approach.
So does it
Because
matter
remember,
what comes
it's a
first?
two-step process. So I mean,
Right.
you're going to need the other approval.
Does it matter what step you take first? Could we introduce them to you first and then they do the application, or should they always do the application first prior to being connected to a lender?
I don't think you could do either way. I mean, I think directing them to the lender first is probably the better approach because the lender is going to know the programs that the city offers and they're going to know all the other programs that they're available for. So that way, when they do have the conversation with the city, they can go in and say, I already talked to my lender and they told me that I qualify for mass housing, I qualify for this. So that way the city knows. So I think it's a good idea to have it start with the lender and then do that piece, then go to the city. Because any lender, honestly, any lender that deals with the city of Boston, they should know the
Yeah.
city's guidelines, so they can
Right.
tell them right off the bat if they're going to qualify or not. Because it's really, I mean, the city,
And
they don't have a credit score requirement, right? So it's not like you got to worry about them meeting a certain requirement. They don't have DTI requirements. Their requirement is simply you're a first-time home buyer, you're going to live in the home, you don't exceed the income limits or the asset test. Those are the four things that they look at.
my thing is just I'm always thinking about the client, right?
Mhm.
And how can they build generational wealth? How can they build real wealth? Which, again, I think you should talk to the city because the four families definitely should be included. That no brainer. Um, yeah, it's still brainer. But the question, I mean, I know you said you will go back and figure and find out is, if my family get too big, for this 3-bedroom apartment,
Mhm.
but I don't want to sell the asset,
Mhm.
and my partner family is getting too big as well, and they don't want to sell the asset, but we need to move.
Mhm.
And I think that's the part that's very important. If they don't have to sell the asset, I think this is hands down,
Mhm.
it's like the program,
Yep.
hands down to build wealth fast, with getting funds from government, from the city, no brainer. It's actually a real good way to start wealth. I just need to understand so we don't get in trouble or get
Mhm.
into a situation where we purchase this home and we have to get rid of it because we had another baby.
Yep.
Which you know, from my understanding, loans cannot discriminate on because of family size.
Correct.
So if that's one of the reasons why we have to move, I don't see how the city will say, you have to sell it because I think that's a sign of discrimination.
Yep. Yep.
So
But I will
that's
get
what
that.
I'm.
I will get that answer for you.
Yeah,
I'm again. My gut tells me 5 years. That's what my gut tells me,
yeah,
just because of the way the grant is set up. But I can certainly get that answer.
yeah. Thank you. But like I said, other than that team, I think we all should be thinking, um, saying, hey, how can we present this to our clients? And also, I just hope that you speak to your family team. I hope you speak to your friends and you see, look, who isn't owning right now and try to put it together and make it make sense. Also, I think it's going to be very important that we see that contract and we align to that particular contract so we can make sure we protect our clients. I think escrow is going to be huge. I think losing ownership if you're not paying is going to be huge as well. Um, and then obviously maintenance of the home, cutting the grass and all that. I think we could think for our clients and trying to smooth the transaction out as much as possible. We could really bring some real good value to our clients. This product, to me, again, it's another game changer from the city of Boston. And we didn't even talk about we didn't even talk about this, buying a 3-family and then turning the ADU, and that's how you get the 4, right?
Right.
We didn't even speak about that. Or buying the 2-family, and that's how you get to the 3, right?
Mhm.
Doing the ADU. So this you have to really understand the product, but thumbprint is your job to make sure you make it work for your client. Come up with these clever ideas and sell the potential to your client. But we can't leave this money on the table. We have to take all the city money. That's one thing about thumbprint. We got to take all your money. We got to take all the city money. We
Listen,
have to take it all.
I agree. And just so you know, and I'm not sure if you're aware of this, but the city does have a fund for ADUs. They do have a program for
Yep.
that as well.
So wait, let me rewind because we talking about stacking. So you could do the co-purchasing, right?
Mhm.
And then turn around and get money for the ADU?
After you buy the house and you go through
Yeah.
the steps, they do have an ADU
Oh
program.
my Lord of mercy. Man, Jesus Weezus. Come on, Doris. Talk to us, Doris. Jesus Weezus.
Good morning.
Lord.
Yes, I was just wondering because I've known we've heard about the ADU program from the city, but would you be able to go over it from the lender perspective?
I could. I was involved in that. I don't have that information handy. Basically, it was discussed, and there's a handful of banks that are doing it. They're being done as more or less home equity products or second mortgages. And they would come in. I want to say, if I remember off the top of my head, I think it's about 50 grand that they would give to go towards an EDU. But I do have that material. I can dig it out, and I can certainly, put something together and forward that over to you as well.
Thank you.
You're welcome.
Thank you, thank you, thank you. Any other questions before we let cousin Vinny go?
No,
All
I think
right,
we're
Vinny.
good.
Did you share your contact?
I will. I'll forward you a copy of the presentation. Last page has all my contact information. And I'd be more than happy to send an email out to everybody, with all my contact information. A pretty easy guy to get a hold of. Best number is cell phone It's always with me,
You can
always
put
on
it.
me.
You can put it in the chat now if you want.
Yeah, let me just open it up here.
I just want to say,
We can't hear
Breaking,
you. So,
breaking.
yeah, we can't hear
can
you,
you hear me?
Joanna.
Can you hear me now?
Yep.
I just want to say shout out to
Yeah.
Vinny. Thank you so much for coming on. I know you were able to save one of our deals this week too. So, just thank you so much for just always being available and your willingness to hop on so last minute. So I
Well,
appreciate you.
no, listen, thank you. I'm happy to do this. And if you have ever any questions, like I said, feel free, reach out. Be more than happy to share, what's out there and see if we can help you with something. But I just put my email and my cell there. All right.
Perfect. Perfect. Thank you, Vinny.
All right. Thank you. Well, everybody have a great weekend. All right.
You
Bye-bye.
too. All right. I want to hear y'all thoughts. I want to hear some clever thinking. How we're gonna put this product together and make sure it works for our clients. That's what I want to hear. Talk to me. I heard some real good things today. Talk to me. Go ahead, Taina.
I had a question for you, Alex. Thank you for having you and Joanna having him on. The when we talk about the contract between people, the two parties, how does that ever, let's say for example, you had brought up something like if they don't pay, then there's penalties and whatever. If it has to do with ownership, um, the level of ownership between the two parties, how does that reflect on the actual deed? Or does
Sorry,
it?
say it again. Sorry, say it again.
So let's say, for example, two parties buy. One party is fairly delinquent every once in a
Mm-hmm.
while, and in
Yep.
the agreement it states that you basically you're taking off your ownership percentage every time you do something like that. Let's say
Mm-hmm.
that's the agreement. As it
Mm-hmm.
pertains to the deed itself, because now please share what the likely deed would be, is like tenants in common or something like that. But in that respect, would it be reflected anyway that this owner who is more delinquent is less an owner than the other person?
I think on the deed when it's showing it really doesn't matter. Only I think when you signing that contract, that's when it matters. Because if you're selling or refinancing, this contract says, look, I'm taking this much versus the deed. Does that make sense? Because on the deed it doesn't tell ownership. It doesn't say you won't see on the deed this person owns 10% of this home. You'll see that
Okay.
more of a contract, especially if you're buying a home with an LLC. It'll be in the docs. It won't be on the deed. That makes sense?
It does. It
So
does.
the contract I think plays a huge part, and the contract plays a huge part in this deal. The contract plays a huge part to protect both parties. The contract. So once we see the contract, most likely it's going to be a contract that we know the city is going to be plain contract. Hey, you have to pay. But the consequences, what we think of to improve that contract it's really going to protect our clients. And also, it's very important to create this real estate blueprint for our clients. If you when selling real estate, I think it's important. We say, all right, look, you could buy this single family, but if you buy this particular home, this home will pay for that single family. I think that's important instead of just listening to the client say, "Oh, you want a single family? All right, cool. All right, I'll do what you ask me." 'Cause a lot of times the client don't know any better, so it's our job to really to tell the client and make sure that the client knows all of their options. That's very important, right? You can go to a dentist and say, "Hey, I want a cleaning." The dentist see cavities and rotten and wisdom teeth is coming up, and they say, "Oh, well, okay, well, they just wanted to clean it. Let me not say anything." We can't do that in real estate. I think it's unfair, right, Joanna?
So I think there are a lot of creative ways to use this program or this particular product, especially for multi-generational families who are not able to purchase homes a traditional way. But you might have elderly parents who have a lot of money, or who don't, who have good credit, for so to speak. I don't want to say a lot of money because obviously this income criteria, but it does give the opportunity for multi-generational home ownership within one property. So I think there's a lot of ways to be creative about it, especially for those immigrant families who's here and who are not able to use FHA for a lot of guideline reasons. They may qualify for something like this, right? And so I think that it's really, really important just to kind of tap into the clients that we have who are not able to purchase the traditional way, but and you're able to double dip. They're giving you 1.5% down per individual, and you're individually still able to get the down payment assistance separately, which I think is huge. So it maximizes the down payment assistance tremendously, making it a lot more affordable. So, the owner occupant piece, I think, is the tricky part because, of course, you would have to, own or occupy one of the units, therefore kind of reducing your ability to kind of get that rental income. But if you're getting a 3-family and there's 2 of y'all purchasing it, you're winning. So I think there's a lot of ways to be creative with this product, if you use it the right way.
I ain't gonna lie to you. Legal crook was in my head, like right. Once he answered the question of how about 2 parties want to kind of go their separate ways but not want to sell, I mean, potential's there. Because in my head, I'm like, all right, let's throw it out there. I'm dating Joanna, right? We are getting serious. We want to be together, but mortgage before marriage. Look, Joe, we don't have enough money to buy 2, 3 families, but let's go in on this particular 3 family and do the co-purchasing program. I will sleep on the first floor, you sleep on the second floor, right? What if we get married? What's the bank's gonna say? Can we now combine? We started dating while we was just, partners in this particular product. What happened next? And again, banks cannot discriminate on families or family size, right? So that's a loophole. I'm sitting here listening. I'm like, this is a no-brainer. This is actually a no-brainer. Like you now have the power to look at your friends and family like, yo, y'all are real close to one another. Did you ever think about doing a co-purchasing program? I could get both of y'all $50,000 each. And also, once y'all get settled, we can get another 50,000 for the ADU. This is huge, right? The thing is what makes this program amazing, and how you could really eat from this program, how you really could eat from this program. Look, you study this program, right? And maybe you study this program, you study the ADU program, and maybe you study some of the grants that he mentioned. You study those programs, right? Once you know everything about the program, guess what? You call yourself the expert. You start speaking about this program. Now you're not speaking about FHA and NACA. You're not, or conventional, or a 203K loan or mass saving. Like you're speaking about one thing, right? One thing, whole purchase. Hey, I teach people how to maximize their friendship by their friendship and turn it into a business by buying multi-families together and getting $100,000, up to $100,000 in the process. In that same process, I teach them how to turn that 3-family into a 4-family, how to turn that 2-family into a 3-family. I want to hear videos like that coming from this team, because that's bringing real value to your particular your client, because they don't know. And if they don't know, how do they know you have the info? So Laura, go ahead.
Yeah, Alex, I just wanted to, I don't, I'm sure a lot of you guys are hip to this, but this was a lot of information. And if you want to create yourself a cheat sheet that works for you, or you want to simplify it in ways that, you can say, like, I want it in my language so I can,
Yep.
explain it to this type of of client, like leverage AI, like go on ChatGPT. There's free accounts in there. Take a copy the link from the city of Boston or wherever this product was. Even download that the presentation that Vinny had, upload it into ChatGPT and say, hey, make this, you can be as raw as make this for dummies, and make it so easy that you can like completely understand it and memorize it, and then you can share it with your clients. Because I think one of the big assets that differentiates like residential agents is how comfortable they are with the information that they are like with the products and the information that they can provide to their clients. So leverage AI, like you just turn it into, and you do that with everything. I do that with any SOP, any policy that I have. I take it, I upload it in there, and I'm like, hey, break this down for me so I can explain it. Sometimes I'm like, I have this type of client, I'll put that in there, or this type of situation at work. And I said, and I put that situation in there and I say, how does this policy affect them? Like leverage AI. That's how I do so much like on my day to day.
Oh, that was gems. Thank you, Laura. Drop a 7 for Laura. Those are gems. And you can also change the language, right, Laura?
Absolutely. You can. You can take, I
So
do, if I have, when Jeff and I, we have a couple of clients and, in commercial real estate, and I take the same message I'm giving them in English. I just take it and I put it in Spanish, and I speak Spanish, but it's just like, why waste time?
yeah, yeah, I love that. That's a real good idea. So, all the Creole speaking agents here, you could put in Creole, you put in French, and again, like she says, Spanish. You can put in you put in any language. But as Laura said, again, create your cheat sheet. Create your cheat sheet. But I want to see those videos how you break it down and you communicating to your client. This is how you use the product. And also, I am the professional. This is what I do. I think that's so important to stay focused and not just be everywhere with your hands out. Just focus. If this is the product you're gonna run with that product, bring it to the market as soon as possible. Start talking about it as soon as possible. Make sure you master it before you even speak about it. But I love it. I love it. What's up, Jeff?
Did Vinny share the PowerPoint presentation, or do we have it,
He
or
said
he's going
he's
to?
going to email it.
Okay. All right. Thank you.
All right, no problem. Um, any other questions? Any other tips? Anybody have anything else to say before we go? Any new listings?
Not new. 994 South Main Street, Attleboro, went down 20K. It's currently 659.9. We have an open house tomorrow from 11:30 to 1 p.m. I'll share the updated listing information.
Got it. And why 11:30 in the morning? Just curious.
So what I did, I looked at the current open houses that are happening in Attleboro tomorrow. And I picked a time frame that was between some of the start times and end times of the listings there, of the open houses there.
Okay.
You have a suggestion for something better?
No, I just feel like, those show that's church time. That's just my opinion. They're around that 11:30 time. That's why I always went with 1 to 2. Is like, all right, well, you it's after church. It's not too early. It's not too late. Um, that's why I always went with that time because I was just thinking about people leaving church and coming straight to the open house. They already out. Again, people, working all week and don't want to get up so early. 1 o'clock still work for them. So that's why I came up with the one between two.
I think that's a good, and and that was, I didn't think about this. So that's a Saturday. Normally when I do Sundays, I do it later.
Hmm.
I usually do the 1 to 2, but I wasn't even thinking about churches on Saturdays, but that's a good point.
Yep, yep. Deja?
Good morning. I still have my single family in Brockton. The price is goodness gracious, 424.9. 3 beds, 1.5 baths. I also have a 3 bed in Roxbury, 3 bed, 1 bath, de-leaded, laundry hookups in the unit. That one's 2,400. I also have a 3 bed, 1 bath on Lindsay Street in Dorchester. Laundry in the unit as well. De-leaded, 3,800. And we do have a group that wants to go over to Hyde Park Ave this morning. So if you can let us know if 10:30 works, we're ready
You
to
have a
go.
group, I mean a group of thumbprint or
Of
buyers?
course. No,
Oh, okay. I thought you said a group of. So okay, got you. Yeah,
my
that
bad.
works. Text me. I'll give you the code.
Okay.
Yeah, no problem at all. Um, any other listings?
Hi everyone. We have a 3 bed, 1 bath. It's a rental in Fall River. Open house is tomorrow, conducted by Jessica from 11 to 12. It is going for 2,200. My two family in New Bedford is back on market. If you guys have any buyers, we will have open house for that tomorrow from 2 to 3. 49 Parker Street, and that one is listed at 479.
Boom, kaboom, kaboom. Um, actually, just got a new listing. We're gonna actually take photos next week. It's commercial. Doing this with my man Hugans. 1.6. It's in Dedham. Once we have the commercial, once we get the pictures and the videos, we'll definitely share it. But yeah, that's a big listing that's coming up. Um, social media. I keep saying social media. I won't keep saying it. When consistency is a new currency. Um, anything else? Anyone else? Anyone else? Any new listings? All right. Of course, we have Hyde Park, 1135 Hyde Park, 2 condos, um, 1 condo, top floors, 4 bedrooms, um, 2 bathrooms, and then the first floor is 5 bedrooms, 3 bathrooms. If you have any clients, please, 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 bring them through. Of course, as Deja said, some of y'all are going to take pictures today. Push it out. Leverage this particular listing, all listings. Leverage all listings in the office. Bow Trail had amazing training teaching how to leverage listings in the office and outside the office to get your own listings and also get more buyers. That training was amazing. I just hope y'all really paying attention to Road Trip, Bold Trail, because not only they training you, they actually will do these things for you. So you really don't have to do a lot. You just have to say you want it, right? So I could take someone's listing now and say, "Hey, Botrell, show me how I could take Deja's listing and get more listings from this particular listing, or can you do this for me?" So you're paying for Boat Trail. You should be utilizing Boat Trail. Again, it costs you nothing to say, "Hey, take everyone's listing in the office and leverage it so I could get more listings and I could get more buyers." That conversation you should be having. It only improves your business, but you have to speak. You have to stay active. But it was a real good training. Other than that, we woke up today. I don't know why you woke up. It's up to you to figure that out. Until then, I see you tomorrow at training. Have a nice weekend. See ya.